Should real estate investors be looking into franchising? Hi, I'm Tony Barchetti, a franchise consultant, and that is the question that I've gotten from several of my real estate investor friends. The answer, quite frankly, is certainly. Let's do a quick analysis of why I feel this way. Most real estate investors are following the basic strategy of diversifying their portfolio of holdings, right? We are all taught in the investing world, don't have all of your eggs in one basket. And diversifying so that if one of your baskets struggles over time, the other baskets are there to equalize and mitigate any losses. So we're taught, don't have all of your assets in the stock market, don't have all of your assets in the bank, and in this vein, you also shouldn't have too many assets in the real estate market. We've all seen what can happen when the real estate market plunges in 2008. I'm not advocating to eliminate real estate holdings. My advice is only to add one more bucket to your overall portfolio, and that is a business bucket. Maybe you have your own business already. Well, that's great. But if an investor wants to add another income stream to their portfolio, franchising is the ultimate way to do that. Typically, an investor would want to have absentee type of model. And in the franchising world, there are many options in this regard. As a franchise consultant, I help many investors look at options where the investor would not have to work in the business, but are simply and easily managed with a manager in place. So let's just do this for fun. Let's do a side-by-side comparison. Let's say, for example, you are considering buying another $150,000 rental property. Now, for the sake of equal comparisons, whether you have to put down a down payment of $30,000 and borrow the remainder, or put an entire amount down cash, let's assume both options you can do that with is the same. In other words, franchising is just like real estate. You can borrow to buy the franchise and open one, because that's the truth. So they are the same in this regard. Therefore, you're tying up $150,000 of capital either way. Next, let's assume your rental brings in a positive cash flow of $300 per month. Cash flow, $300 a month. So let's assume the property appreciates 3% per year, which is pretty standard assumptions. So after 5 years, you've gained $18,000 in cash flow and $24,000 in equity and the value of that property. Okay? Now, obviously, things can go wrong and make less with repairs or not as good a gains on the 3%, but we do need to have a basis of a comparison. So now to the franchising side. Let's say we invest the same $150,000 of capital, whether we borrow it or use cash, in the same method as we did the rental. But instead, we buy a franchise that is able to be run with a manager. Now, we look at that franchise model's disclosure statement that shows that the average franchise in that system is profiting $100,000 per year by year 3. This is their average producing franchise. So now we will assume the first 2 years that we made less than that 100,000. Let's say 30,000 the first year and 50 the second, and by year 3rd it jumps up to 100. Now let's compare where we sit with the business after 5 years. 5 years of those numbers will have made a cash flow of $380,000. Now, what's the value of that business? Typically, you could sell a business for 3 times the cash flow per year. So that business would be worth another $300,000 of value. So let's look at absentee models that can easily achieve these numbers. These franchisees have to report their sales and pay royalties. So their reporting is quite accurate and verifiable. Could something go wrong in the franchise business? Of course. Nothing is guaranteed. But in either case, nothing's guaranteed. My point today is that although real estate investing is a very sound investment strategy, it shouldn't you consider another bucket in your strategy? So maybe you are selling a rental and thinking of getting another, or maybe you are considering buying more real estate. My point is, let's have a talk and look at numbers to compare the future growth potential of that money of yours. Let's look at a franchise model compared to what it will do in another rental. Let's schedule a short talk to see if there are some ideas that fit your investing strategies. So thanks for tuning in. Hope to talk to you soon.